Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Dennis Dick, Mitch Hotch. Well, there are days with no real theme. Market kind of meanders, no real driver. And there are days where we know the driver pretty much from the moment we wake up. Today is one of those days. Johnson & Johnson vaccine is on pause. That's your headline of the morning. That's the headline of the day, at least for now. In markets, there are wide-ranging implications from this headline today in the market. We would talk about that. There are some other things on my radar, but Johnson & Johnson is going to be the lead story. It's going to be the first, second, and the third story across the board today. That's just kind of the way it is, unless something else comes out that's bigger. But for now, it's a story of Johnson & Johnson. We did have the largest SPAC deal ever. We can get to that at some point, but I'm sure they'll cover it more on SPAC's attack. So let's get right to it here. Our guest today is John Inch, Senior Analyst for Multi-Industrials at Gordon-Haskett. He will join the show at 8:35. Super excited. We're going to talk GE. We're going to talk Honeywell. We're going to talk 3M. And this guy rode GE all the way down. He called that thing. And he turned neutral a couple months ago. Finally, so we're going to ask him where he stands now on GE. That'll be at 8:35. Everyone, go ahead and smash that like button. Give us a like on YouTube, Facebook, Twitter, wherever you're watching. Hit that subscribe button. Leave us a comment. We appreciate that. Also, I want to make a quick announcement. We are doing more contests, more giveaways. This week, we are doing a giveaway on this show, on Pre-Market Prep. We are giving away $75 worth of Benzinga swag. I will do the contest later in the show, so you're going to have to stay tuned for that. They call that a teaser, everyone. So stay tuned for the contest later on.
What's the like goal? What's the like goal for that contest? What are we doing today? 500 likes to get that contest started?
Yeah. I'll do the contest, and it'll actually happen if we exceed 500 likes. That's a good point, Mitch. 500 likes.
Hit the like
contest, and I will put the link, and I will give you all instructions on how to enter the contest later on in the hour. Let me bring up my chart here of the S&P, or just of SPY, so you can see what's going on today. We are down. A lot of this activity in the last hour from the Johnson & Johnson headline down in the S&P, flat in the NASDAQ, down on the Russell. Crypto is going to the moon ahead of this Coinbase IPO tomorrow. Bitcoin's up 5%. Ethereum's up 4%. I mean, that's going to be fun tomorrow. So I'm looking forward to that. Dennis, how is your morning going? It's been an eventful morning for me, and I'm not even trading.
I had a very costly sleep in, I will say that. I checked my phone at 6 a.m. and I was like, oh, there's nothing going on. The S&P futures were up 1 point, so I'm like, okay, I'm going back to sleep. I never sleep in. I usually get up at 6 all the time. I was like, I'm going to go sleep in because there's nothing going on. I came back down at 7:05. And I looked at my computer and I was like, what happened? Obviously, first thing I do, flip on CNBC, and it's right on the top of the screen, Johnson & Johnson pausing the vaccine. I'm like, oh my goodness. So immediately what I try to do is trying to get out of anything that's like casino, obviously reopening stocks, airlines, cruise lines. And this is my overnight portfolio, not adjusting my long-term portfolio. But I'm like in my overnight portfolio trying to put the stay-at-home trade on, trying to get out of the reopening trade. It was really tough because it was already after 5. I was 5 minutes after the news when I got to my desk. It was already on. So if you were at your desk, there'd been an opportunity, but obviously very costly sleep in for me. I had a few reopening stocks overnight. Those get hammered. I was on a couple stay-at-home stocks, so obviously I hold on to those because I figured those were probably going to go higher. But I mean, this is where we are today. It's all about rotation. Where we are tomorrow is going to be a different story. But what is happening this morning is a clear rotation from reopening stocks into stay-at-home plays. You can clearly see it in Zoom, up 3 points. Peloton, up 1.68%. Go to your cruise lines. NCLH down 4%. RCL down 3%. AAL, if you want to go to the airlines, down 3.5%. Delta down. Boeing down. Very clear rotation from the reopening trade to the stay-at-home trade. The question is, does that continue? Or is this just a clear overreaction this morning? And, what was happening, obviously, before that, we've been in if you look at the last 3 months, reopening stocks have been rallying and stay-at-home stocks have been going down. So is this the turn? Is this something new? I mean, I guess it depends what the next headline is going to be, right?
Yeah. So just to be clear on that headline, it was a tweet. It was a tweet at 7:01 from the FDA saying that the FDA and the CDC are basically pausing the administration of the JNJ vaccine at federally run sites, and they're recommending that states do the same, which basically means that states are going to. That's like a recommendation in quotes. It's not really a recommendation. You know what I mean? But yeah. So they're pausing the administration of the vaccine because 6 women between the ages of 18 and 48 got a rare blood clot 1 to 2 weeks after they got the vaccine, and 1 person died. I should note, and the FDA points this out this morning, there have been nearly 7 million doses of the J&J vaccine administered so far. I am one of those doses, quite to be frank. And so of those nearly 7 million, we're talking about six cases of severe blood clot. And so they said it's out in abundance of caution. And I'm sure this will be a developing story in the days and weeks to come.
Yeah.
But Dennis, you noted the immediate reaction, not just in Johnson & Johnson, but also in Pfizer, right?
Yeah.
In BNTX, I'll pull up that chart there. In Moderna, right? All going up. Look at that, Moderna. Wow.
Moderna and Novavax are both up 7% and 8% respectively. Obviously, because everybody's going to be now, if Johnson & Johnson pause, they're going to need more of their vaccines. So they got to pick up the slack. So these are all very obvious reaction. Obvious guy says trade this morning. Everything you would think would happen is happening at least 1 hour after the news. Now, we know this market can pull the rug out from under stuff. So where we are 5 hours from now, nobody knows. I'm going to say they're going to be experts. They're going to say this is going to happen. This is going to happen. If they call it right, they got lucky, because it all is going to depend on what the next headline is. The only concern I would have is not so much 6 out of 7 million seems like nothing. I'm actually surprised that the FDA would pause it this soon with only 6 people, because 6 out of 7 million. I mean, what percentage is that? It's astronomically small.
It's very small. It's very small. And just to put that in perspective too, so 7 million doses of J&J have been administered. There's been 120 million doses administered overall, right? 120 vaccines in the U.S. in the Pfizer, Moderna, Johnson & Johnson, right? 120 million. J&J accounts for 7 of those. 7 million of those 120 million. So a very small portion of the vaccinated population has gotten Johnson & Johnson. Most people have gotten Moderna or the Pfizer BNTX vaccine. And of the 7 million, we're talking about 6. So you're right. But you and I are not doctors. We don't know. All I know is what I read, which is that it's a pretty serious blood clot. But again, we're talking about 6 out of 7 million. And they're all 6 were women ages 18 to 48. So maybe there's something genetic there. Don't know.
I mean, I had this conversation with my parents on the AstraZeneca. In Canada, the AstraZeneca one is approved, and obviously there's been blood clots, and my parents were eligible for it a couple of weeks ago.
Yeah.
And we were having the conversation. I'm like, okay, well, there's been 27 people with blood clots, but it's been administered like millions and millions of times. And most of the people with blood clots were a younger population. Yep. So my parents just weighing the pros and the cons are like, well, I don't want to get COVID, because if I get COVID, I might get blood clots from that as well. So weighing the pros and the cons, they decide to still get the AstraZeneca vaccine, despite 30-some people having clots. And obviously the number's up a little bit since then. So there is still going to, that's why I'm surprised they stopped it this soon at only 6. But I mean, they're being careful, and I can respect that. The concern I have for the reopening stocks is, does this change the mentality? If you have a person who is an anti-vaxxer, or if you have a person that was sitting on the fence and saying, well, I don't know, some people got sick from the AstraZeneca one, they haven't tested it that long. Do I want to get it? Don't I want to get it? Yep. That person who is sitting on the fence just might have swung a little bit more to the no camp with this morning's news as opposed to the yes camp. And what that does is, obviously, if there's less people getting vaccinated, or some people actually starting to refuse vaccinations for fear of getting blood clots, it slows the reopening trade down. So I think the natural reaction the market is having this morning is correct. I would think logically the reopening stocks would immediately get hit, and I would think the stay-at-home stocks would catch a bid, like the Zooms and the Pelotons, which is what we're seeing this morning. The question is, do they restart it and then, all this goes away? Is this just a blip on the radar? Do we see cases of more blood clots? And then, okay, well, now we're starting to get scared. Or in a worst case, we start seeing cases of blood clots in the other ones, and then everybody's scared. So there's a lot of things we don't know what's going to happen going forward.
So my initial reaction to the reaction, in Zoom and the airlines, is it seems a little overdone, if only because, as I mentioned, Johnson & Johnson has accounted for 7 million of 120 million vaccines. Okay, that is not, they're not the majority provider.
And only six people got clots.
So most people are still getting the, I mean, your point is that if people just, if the sentiment towards vaccines as a whole changes, my point is that Johnson & Johnson itself is not the majority player here. There's still Moderna and there's still Pfizer. And if people get that, I mean, my point is, how much of an impact really is this going to have? My first instinct was that you see the sell-off in the reopening stocks and the airlines and the cruise stocks, and you see the rally in Zoom and Teladoc and whatever. Yeah. And my first instinct was, okay, I want to fade this. That was my first instinct.
Don't be early on the fade, though. That's what I would say, is because there could be some follow-through here. One thing you have to consider is the Zooms and the Pelotons have been beaten down. I mean, it's not like these things are at highs. They've been beaten down and they've wanted an excuse to rally. Sure. So they're oversold. Now you give them an excuse to rally. There could be some follow through. So you're coming in and shorting Zoom up 5. Maybe it just rolls over again. But this is, not anything is good news, but Zoom benefits from this news. There's no doubt if we go back to stay at home, Zoom directly benefits from this. So you're playing, the odds that, okay, this is just a blip and, we're going to shrug this off. We're still going back to reopening. I hope we're going back to the reopening. I want to go back to the reopening. I want to be back to normal. So, it's very disappointing news, not even just from a stock market perspective, but just from an overall, let's get the hell out of this mess we're in. So it's disappointing to see this morning. I think it's a blip on the radar. Personally, if I was offered the Johnson & Johnson vaccine today, I would take it. If I was offered it in Canada, I would leave the show right now. If they offered me at 8:30 right now in 15 minutes, I would actually drive up there and go get the Johnson & Johnson right now. That's my own personal. That's what I would do. Yeah, I mean, but there's some people that aren't going to do that because of this news.
Hey, I mean, I got the JNJ vaccine, and if you discount this tail that I'm growing, I feel fine.
I mean,
I feel fine, Dennis.
Well, that's it. So the majority of people, maybe they get sick for a day, but the majority of people probably aren't going to develop blood clots from this. Yeah. So I hope that people, that are sitting on the fence, maybe listen to our show and maybe still, if we can influence a few people to still get the shot, I think we're better off. I think we're better off. But, I understand if you're nervous about this, if you were nervous coming in, you're going to be more nervous after this headline this morning. Sure. So I think it does delay the great reopening trade that Cramer's been preaching for a while here now. I mean, the great reopening trade has been way overpriced too. I mean, we're talking about moves in stocks and the cruise lines that, are up, 50, 80, 100% in a matter of 3 to 4 months. I mean, and obviously with the dilution factors, we were talking on NCLH, which is why I sold it. I mean, it's getting to a point where when you consider the dilution, that these things are getting back to where they were. Yeah. So it's hard to just jump in and say, okay, yeah, let's just go jump in. But maybe if you're sitting, it all depends on your portfolio too, right? If you're sitting with a whole bunch of stay-at-home stocks and now you get this rally and now you want to get some reopening, maybe you rebalance your portfolio. To your point this morning, Spencer, maybe you do a little bit of rebalancing. I think just staying a little bit diversified with both is a better way to play it, because I don't know how it plays out. If we're stuck in COVID for another 2-3 years because the vaccines are developing blood clots, this is a scenario. I don't think that's going to happen. But if it did, a lot of these other companies, you're going to see a lot of, different movement in the stocks than we're seeing today. The market is pricing in that we are imminently reopening. And that imminent reopening just got a hiccup this morning.
I would actually rather talk about this the stay-at-home stocks and the reopening stocks here, because
Sure.
you made up a good point that they've been looking for an excuse, right?
Yeah.
They've been looking for a reason. So, do we look back in 2 or 3 days and say, "Oh God, that was just a classic fake out," and resume the downtrend?
Maybe.
Or and that's the question this morning: is this really a pivot point? I can't imagine this is the pivot point. I can't imagine a headline of, again, we're talking about 6 cases out of 7 million, out of 120 million dose total vaccines here in the U.S. I can't imagine that this is what turns Peloton and Zoom and Teladoc around. You said yourself, you think this at most delays the reopening.
I don't think it stops the reopening, but I do believe it delays it to a certain extent. I think it slows down our reopening. I mean, it's obvious it's going to slow down the reopening. They've paused the vaccinations. So, I mean, it's going to slow down the reopening to a certain extent. How much is the question? And is this the opportunity now to start getting out of some of those stay-at-home stocks that are, been way overpriced and obviously been hit? Or is this the start of a new uptrend for some of them? We can't answer that question yet. I can just tell you that Zoom was $440 a month ago, and it's now $320. So it's cheap on a relative scale, not cheap on valuation, but cheap to where it was, and in the eyes of the market. So it's over. Not, I shouldn't say cheap. It's oversold. It's been oversold. So is this a big excuse to rally? I'd say if it could get above 340. I think if it does start to rally today, it's going to struggle. If I want to give you levels, 340 is huge on Zoom. That's where it got up to 6 days ago and then turned around off that level. So it's a big level for it. And it's getting a little bit of rally this morning. I actually would have thought they'd get more of a pop, though. So, it's kind of stalled out. It popped initially in the headline. It's kind of just hanging out now. So I think a lot of traders, like even myself, don't know where to go from here. It was obvious an hour ago you were going to buy Zoom when I was sleeping. But now that it's up $5, it's like, oh, do I want to pay up $5? Is this, or is this just another fake out, like you're saying? Yeah, I should be selling into this rally.
I don't think anyone does want to pay out. I just to me, it would seem like we would need a much stronger headline than this to really turn the tide in stay-at-home stocks and or really also in the reopening plays. It's just there's so much overhead supply. They went so far so quickly. If I just zoom out on the Zoom, I mean, we're still up huge from a year ago.
Oh yeah. That I've been on this show saying I think Zoom is eventually $100 stock again. I just don't know the path that it gets there, and I don't know if this gives it the pop up and we could see 400 again. I'm not sure about that. I tell you, at 7 o'clock I would have been buying it if I wasn't sleeping. And now I probably would still be holding on to it at this point. I don't think if I was long it, I think I would be holding it at this point, maybe stopping myself out at scratch or something. But because I don't know if there's going to be follow through after 9:30. Remember, institutional traders, I know everybody thinks everybody's trading the pre-market. Institutions are too big. And a lot of those institutional traders don't even get to their desk till like 9 o'clock. Yeah. So, I mean, literally, that is the way it is. They're well, I guess maybe when we're staying at home and we're working from home, maybe the desk a little sooner. But the commutes and stuff, that it used to be. They used to be, institutional traders aren't as early. They're not up at 4 a.m. trading these headlines, and it's institutional money that will move it. So, do we see follow through at 9:30, or do we see the fade? I mean, that's still to be determined. We can't answer that question. I can't even predict what's going to happen here. You could predict an hour ago that we were going to see this move from reopening to stay at home. The moves happen. We have basically a 5% move, in the last hour, because if you look at the Zooms and the Pelotons up 1.5% to 2% and the Cruisines down 3%, you can clearly see there's almost a 5% swing for your pair traders from the reopening in the classic reopening and the classic stay at home. Yeah. So it's a big move already. So if you come in here now, you're chasing at 5% on a JNJ headline. Do you want to do that? Is it going up 10 today? Or do you wait for a little pullback and then maybe strike? I mean, I always like buying the pullback.
Sure. And one more thing on the vaccine front. Novavax is presenting today at a Goldman Sachs conference at 2:30 Eastern. So they've said, I think there was an article overnight in Reuters that they're dealing with supply shortages. They expect to be at full capacity in sometime by Q3. If you are interested in Novavax and wondering how they fit into this equation, it is up big this morning. They're presenting later today, so there could be a headline or two to come out of that at 2:30 Eastern time. Stocks up 9% this morning.
And that makes sense to me too. I mean, and it was oversold too. Novavax $300 a month and a half ago, 175. They're oversold. They're not cheap because none of these stocks are cheap on evaluation metrics.
Yeah,
but they are oversold. So there can be significant relief pops in here. And on a headline like this, it's not unexpected what we're seeing this morning. I think this is probably what I would have thought. A lot of things, as obvious guy says, trade is on this morning. What you think obviously would happen is happening.
I think that you got to keep an eye on a separation from Peloton in those stocks, because I think Peloton is going to eventually separate itself from those plays. I honestly like Peloton in the long run. Why? Because they changed their business from being focused on strictly let's sell this bike to becoming now a personal trainer at your home business. That's what this business is now. It's no longer just an equipment. It's a personal trainer at home stock. And this is going to be a big movement in kind of working out, because before the pandemic, everyone went to gyms to try to get this personal trainer. And this was the biggest, I have 5 friends that have degrees in this. Because why? Because they were making money. They were going to gyms and people were trying to get this. Now it's at your home through the TV. I turn around, I say, what am I going to do today? And I look at the TV and communicate with the TV on what I'm going to work out. Yeah. So I think Peloton will separate itself. Zoom, I think maybe 350s, but I agree with you. It's going to be hard to get above that. I mean, it's starting to push, but
competition is more intense for Zoom. To your point, Mitch, and it's a good point. Competition is more intense for Zoom than Peloton. We don't have imminent competition here for Peloton, where you have Microsoft Teams going hard at Zoom.
Oh yeah,
like hard. And there's Cisco WebEx, but there's a million other ones coming. That's an easier thing to create than the infrastructure for a Peloton. Like you think, okay, naturally, well, you got NLS, maybe Nautilus that maybe can compete, but they're not on the same planet as Peloton. So Peloton is the player, where Zoom has been the player. But there is a lot of players coming for Zoom. I mean, we used to use Zoom. We don't use Zoom anymore on this. So, I mean, we found something that we felt was, working better for us.
Yep.
So, and this isn't even a major player, StreamYard, but it works great. So, you know what? That's why I'm not a fan of buying Zoom longer term, but I could possibly get talked into Peloton, although the valuation makes me turn up my nose.
Joel got it good. Let's just say that.
Oh yeah, I got it good down there too. I just sell too soon. I think I bought it before Joel. Me and Raz were buying that $25. I sold it 40. I thought it was a good trade.
I used to buy this thing right after the IPO. I think I don't know, but Lord knows if he still has it. I don't think he does.
Oh yeah, Joel was in right from the beginning, wasn't he? From forever.
Yeah,
he's a big fan. He bought the Peloton and then he bought the stock.
Yeah.
That's it. This is really good news for Peloton here this morning, though. So if you're coming in and shorting Peloton into this, you are fighting, a headline that is actually, it's not good news for a lot of people. It is good news for Zoom and Peloton.
So as I mentioned at the top, we are doing a contest this week, a giveaway on PreMarket, but I cannot start the contest until we get to 500 likes. And
okay, I'll help you out. I just liked you.
Thank you. We're at 2,000 viewers and 200 likes. It's not going to work. I need 500 to start the contest. That's the number that we decided on this morning. So, CPI in 5 minutes. Don't forget, Dennis. That's actually becoming. It's actually becoming a number that I'm caring about, because it's almost becoming like it's self-referential.
It's going to be a hot number.
It's self-referential.
Unless they lie to us.
In a way. So here are the estimates for today, as if, this reflects reality in any way, shape, or form. Estimate is for CPI to come in at 0.5% month over month. Core CPI, which is CPI, but just without food and energy, estimate for that is going to be a 0.2% increase month over month. year over year, which is probably a more fair comparison.
Yeah.
Year over year increase is going to be 2.5% for CPI.
That's the estimate.
That's the estimate, and core CPI, which is again without food and energy, 1.5%. That 2.5% number that estimate is very interesting because that's like basically the Fed has said its CPI is going to have to be at 2.5% for like a year for us to do anything.
They don't want to raise rates. I mean, they obviously want to, and they're going to do everything in their power not to raise rates because one, they know the whole world is built on debt. It's not just the U.S. The whole entire world is built on debt. Higher rates. Just imagine what would happen if they had to raise rates. Right now, mortgage rates in Canada, you're, good borrower, you can get like 1.7%. I'm not kidding you, on a 5-year fixed.
Good deal.
1.7. It's a joke. Imagine if rates went from like these mortgage rates went from like 2% to 4%. Imagine if they went to 6%. Then, like people are losing their homes. It literally, they know they can't, their hands are tied. They can't raise rates substantially. Can they go up a quarter? Yeah, they could go up a quarter, but they can't go, up to 6, 7, 8%, not on their end. Now they can't control the long end. So the long end starts blasting off on you. There's nothing they can do about it. But I mean, they're going to do everything in their power to keep rates low because one, everything is inflated because of obviously cheap money. And they don't want the party to end. I mean, this is what we've been talking about. They're spiking the Kool-Aid for a decade. Yeah. So they don't want to stop. They don't want to have that hangover. You know how bad that hangover is going to be from this party? This hangover is going to just crush some people. So they don't want to have the party end. And they're going to do everything in their power to keep the party going as long as possible, even if it includes adjusting their target rates for inflation or flat out lying to us. So, I mean, this is, like 2.5% seems like a joke to me year over year. When you look at lumber prices and you look at the other stuff, I mean, the stuff we really need is up a hell of a lot more than 2.5%.
I was going to ask you if you saw yesterday, there was an article in the journal, the average used car up 13% year over year. The cost of a used car in the U.S. That is the
used cars are supposed to go down in price, aren't they? Year over year.
That's what I thought.
I would say. Well, and my buddy, like I said, that bought the boat for $10,000. He sold it for 26 3 years later, and now somebody in the same boat. He just sent me an ad. My buddy Jeff, 30,000, same boat.
Yeah,
it's crazy. Prices of used assets are going up. I know when they say used, it's not comparing, but there literally is people paying more. Like trailers and stuff. I bought a couple trailers come moving. I'm probably gonna make money on this stuff. Like as long as you're not in cash, it seems like
pretty much any asset under the sun, whether it's crypto, whether it's trailers, whether it's boats, used cars,
physical assets,
baseball cards. Doesn't matter what it is. It's going up. Right. That's the takeaway here. So you
got to be a picker.
Yeah, so Dennis, I would go a little wide.
I would expect a hot number here, but again, this market, who knows? I mean, we'll see. The CPI is a BS index anyways, but let's see what they have to say.
It's just becoming a fun thing to watch because, we all see inflation all around us, especially also not even talking about the semiconductor shortage and that factoring into things, but because that's going to raise the cost of every electronic under the sun. If as well as delaying it. So let's see what comes of this number here. As I said, I just gave you the numbers. 0.5% month over month. 2.5% is the estimate for year over year CPI. We are 10 seconds, should be 10 seconds away from the number. Let's take a look and see what comes of it. This was never a number that we really paid too close attention to on the show.
We do now, though.
But we do now. we do now. So, all right, let's see. I'm waiting. Is it going to be like what was it? PPI? It didn't come out.
It was late.
20 minutes or whatever. It was like 20 minutes late.
We're chopping around.
Where's my number?
Must be out. We're really the high frequency traders are trading on it because we're chopping around quite a bit.
Well, one thing that's going to be interesting is I was looking at this kind of trend channel, and I was wondering what we're going to rip out.
2.6%, so a smidge above that 2.5% number. Same story with the month over month, which is 0.6%, which is above the 0.5% estimate. So a smidge higher than what they estimated it would be for month over month and year over year inflation in regular CPI. Core CPI, again, the CPI without food and energy, core CPI month over month was the same story, just one tick above the estimate, 1%, what's that, 10 basis points, and core CPI year over year, same story. Is everything came in just a smidge, just a tick above the estimate. So if we can keep this going for a year, then maybe the Fed will raise rates, is what they said.
They definitely don't include lumber prices in there.
I guess not.
Well, it's a fraction.
2.6% year over year inflation.
Those 2x4s, man, they're killer. Sheet of plywood from $11 to $50. But 2.5% year over year. So okay, whatever you say, CPI index. We believe you. Haha.
Hey,
next.
That's the numbers, man. I warned you. Don't say I didn't warn you. All right. What else here? We're gonna have John Inch on in a few minutes here from Gordon-Haskett. Let's go to. You want to go to SPACs, Dennis? We got the
a SPAC deal. What was it?
The largest SPAC ever.
Oh, nice. I like
record. This. AGC. Altimeter Growth is your ticker. Let's talk about this more at 11 o'clock on SPAC Stack. Grab is the company, which is essentially the Lyft. No, it's the Uber. It's the Uber of Asia. It's the largest ride-hailing and food delivery company in Asia.
Wow.
So yeah, it's ride-hailing and food delivery. So it's more Uber than it is Lyft. So again, $39.6 billion deal, largest SPAC ever. The company posted like pretty ridiculous year-over-year growth this year, and so they dominate. They dominate this market in Asia. Their main market is Indonesia, but it's based in Singapore. And this company Grab is just they have like 72% of the market in Indonesia.
What are your thoughts on this one? Go to our SPACs master there, Mitch. AGC, following this story?
Yeah, so one of the things that I would say is this one was viewed as potentially maybe it kind of more going into renewable energy, but I think the company that they got is going to give them an opportunity, but you can see from the reaction, it was a quick sell into this pop. I think there was a lot of rumors on this before, and so this is kind of more of a buy the rumor, sell the news event in my eyes. I thought people were already trying to match which SPAC was going to get Grab. It was already kind of mentioned that Grab was going to go towards a SPAC. So I think this might be a sell the news kind of thing, but we'll see if it can hold the gains today. I would love to see it hold 14 on the downside, maybe a quick downturn till about 10 o'clock, and then you see that reversal. That's kind of like what we got in MUDs. If you look at MUDs, you'll see that same kind of move. It flushed out in the pre-market right before, but then near the open, it started coming right back up. And around 10 a.m., it ripped.
What was the news on MUDs yesterday? Because they're really blasted off
NFT.
Again.
And they actually got the NFTs rolling. They got baseball NFTs, and then they're going to be some that are more limited than others. Some will even be as limited as only one. So that's going to be interesting to watch. MUDs is doing better year over year in revenue. I mean, we can all talk about collectibles, but definitely, MUDs has other things. It's not just NFTs. They have cards, collectibles that they sell on their page. And I think the collectibles, if they're going up in value, essentially the assets they have are going up in value. And so the company is deemed to be valued at a higher valuation. So I'll definitely keep an eye on MUDs. It's an NFT play. Will this be a kind of 2021 play and then maybe not for the future? That could possibly happen, but there could be some gains here to be made in 2021 in MUDs.
I like the story here of Topps baseball cards, obviously, and this whole NFT.
Do you really?
Well, I like cards. I always like collecting. I got a lot of hockey cards, so
you got a.
You don't like the story here?
I thought cards were in a bear market since the 60s.
I know, but they are not in the last 2 years now, or last year since inflation's hit everything. Inflation has inflated baseball and hockey cards too.
I just remember when I was collecting baseball cards as a kid, my dad would tell me, "Oh, you missed the golden age, Spencer. The golden age was when I was a kid, right? These cards today are worth jack. They're worth nothing." And that was almost 30 years ago, right? So
I lost mine to a storage war, and let's just say that's not what you do, guys.
War.
That's not what you do, guys.
You left them in your storage, but they sold out your storage. Is this what happened?
Yes, Dennis. I'm still crying about it.
You need
I'm
those
still crying about
baseball
it.
cards back, Mitch.
You don't understand.
On all
I
those
had an
cards.
Ichiro
Mickey Mantle
game
rookie card in
used.
there.
Ichiro game used jersey. Game used. Like literally a piece of his jersey on the Topps baseball card, and I lost it.
All right, let's move on here away from this and let's bring on our guest. Old friend of the show, John Inch, senior analyst for Multi-Industrials at Gordon-Haskett. John, good morning.
Good morning, everyone.
How are we doing today?
Excellent.
Excellent. Fantastic.
Coronavirus is dissipating, the clouds are lifting, and it's sunny here in Pennsylvania. So,
all right, some positivity. We're not used to that on the show. I like it.
Yeah, we do.
I like it. John, you're a little bit more positive on GE of late than we're used to hearing from you.
Sure. I mean, it's all relative, right? I mean, no, the company at the end of the day, they got off, I won't say scot-free, but they got off darn lucky with this slap in the wrist from the SEC. They weren't forced to go back and restate, which could have been potentially very problematic for them, just given how aggressive they have been in their accounting and presentation of financials over the years. We all knew GE, if you think about it, it's a leverage play on aerospace, and we all knew the aerospace industry, given the successful rollout of the vaccines, was going to begin to turn back higher. We're making relative calls. It actually, the stock has done well short term, but the problem is today, it's very overvalued. Its cash is really, if you look at the cash and dissect it, only about a third of the cash that analysts are forecasting are coming from actual core operations. The rest is this hope that it comes from working capital, and there's just really no way to assess that. It ultimately comes to the GE Larry Culp show. They are managing the narrative. Good for them. They really, they know how to play Wall Street like a violin. And the problem is that GE, if you look at it, it's being valued at under 3% free cash yield. The rest of my space is over 4%. The implication simply is that if everybody were valued at GE's valuation, all these other stocks would be going up 25%. And look, fundamentals in this space are really good right now. We've come through this big downturn, this big recession. It was short-lived, obviously. It was self-imposed. And traditionally, industrial stocks do well just because of the cadence of future sales and profits coming out of the downturn. And these companies have all done an incredible job of preserving their profits and what we call their decremental margins in this downturn. I've always said American companies have core competencies in firing people, and that proved to be the case again during the past few months, the past year. Coming out of this, though, we are going to see, I think, a very strong economy, both in the United States and overseas, which is important to these companies, and really animal spirits unleashed, such that you're going to see very strong earnings growth. There are going to be some wrinkles near term, right? We've got supply chain disruptions, semiconductor chip shortages, raw material prices are going up, but to the extent the market's going to look through that to 2022, 2023, and a future cadence of recovery that's very strong, I think there's still room to run in several of these names.
There's a good one from the chat that I had forgotten about, but the board recommended that reverse split. Or whatever happened with that?
That's still coming. It's an 8-for-1 reverse split. Okay. The timing is going to be later this year. I think it's, frankly, the company really didn't have a good response as to why they're doing it. It's kind of odd, actually.
Why are they doing it? Yeah.
Well, the reality is, at GE's peak, about 40% of its stock, which is very unusual, 40% of its stock was owned by retail investors. I remember back in my Merrill Lynch days going to meetings and people asking the CEO, Jeff Immelt, about the refrigerator warranty. I mean, literally no joke. So it's been an iconic American brand for so long. And till this day, I'm very confident that retail provides and has provided the uplift to the stock. Well, we know that retail investors don't run per share analysis. They simply look at the absolute stock price. If it's low, it must be cheap. If it's expensive, like Berkshire Hathaway, oh my God, it's expensive. Of course, that's not how it works. It doesn't matter. GE reverse splitting the 8-for-1, the stock price is going to go up on an absolute basis. Does that drive incremental retail investors to the sidelines? And based on history, you would think it would.
So that's it. That's the
no. They made some comments that the reverse split would get the share price higher. And ultimately, they have 8.7 billion shares. It's very hard for them to move the needle when they affect their little programs, right? So they would just like fewer shares in the market. That's what it comes down to. But there are consequences to that. You obviously then have to reverse split. And they made some comment that a company of their stature probably has too many shares. I've actually sort of said this before, that they seem to have too many shares. But, if they're not in a position to repurchase their shares, possibly for a very long time, I mean, they don't even pay a dividend, so they can't really start repurchasing their shares. That's not going to make a lot of sense.
Yeah. Has the board approved it?
I mean, somebody told them this is a good idea with one of those consultancy advisors, and they've just picked up on it. And there could be consequence. I certainly wouldn't. I wouldn't follow that policy, but that's
John, has the board approved it yet?
Oh yeah, this has all gone through.
It's approved now.
Oh yeah. Mm-hmm.
So do we have a date? Or did they come up with a date yet? When they're
I think it's probably going to be around the timing that the GCAS, the aircraft aviation deal, closes with AirCap. So that was prospectively about 9 to 12 months from the announcement. So I would think by the end of 2021, that's probably the timeline. So, as you start 2022, they're going to be 8 times. I mean, the stock price will just go up 8 times or 8-fold.
Yeah.
Well, as we saw with Tesla and Apple last year, these can be tradable opportunities as little sense as it makes. So just to be clear, John, you've got a hold rating on the stock. What's your price target?
$11.
$11. So okay, so you're not as bearish as you were, but a long way from positive. It seems, and it seems like from what you just said, they survived, right? They survived the year, and that in itself is a victory.
They survived. At the end of the day, the products are pretty good competitively, right? The problem was always that they had too much debt outstanding. And, with interest rates doing what they're doing, that's helped certain aspects of their debt. But they've continued to just sell off these businesses. You may recall a year ago, they sold off their biopharma business, a crown jewel, to Danaher for less than it was worth. And now they've agreed to sell their aircraft leasing business, a 50-year-old business, to AirCap, which will create the world's largest lessor. But, they're taking a $3 billion charge on the sale. They've owned this thing for 50 years. You would think they would be taking a big gain. That just implies that they're selling it again for less than it's worth. So I actually don't think these folks are geniuses when it comes to doing M&A and getting good prices for shareholders. But it's the lesser of all evils. They've been able to sell these businesses and pay off tens of billions of dollars of debt. And that has basically circumvented the risks of bankruptcy. So there's no real liquidity issues anymore at GE. Whereas a year ago, there were serious liquidity issues and concerns. And now the market seems to somehow, I think, misinterpret what you've got left. I call it GE RemainCo, and that somehow these are good businesses. GE is kind of a mediocre company at the end of the day. It's going to have too much debt still compared to its peers. There's a lot of pressures. It's got a very large fossil fuel footprint if you think about the products it makes. Well, between the Biden administration and everybody else trying to go green, GE doesn't really have green products. They have a very small wind business. Well, it doesn't matter that much. They don't really make any money at it, and there's lots of competition. It's not really a well-positioned portfolio in my mind of where you necessarily want to be. Now, they start doing M&A in the future and can transform the portfolio, fine, but you're really jumping ahead, several years into the future. And market just likes to do this. It's banking on Larry Culp as the CEO. It seems to think that it can, extrapolate into the future and then discount all this stuff. There's a lot of I's and T's to dot and cross before you get there. And I just think relatively, there's just much better picks than GE. And frankly, there have been much better picks than GE. Yeah, so, it's up a lot. That doesn't mean it's going to keep going up a lot.
So let's go to one like Honeywell, for example.
Honeywell pretty solid, but it's also not exactly on its lows. That's not a stock I would be aggressively buying here.
Okay.
I think it's fine. I think it's fine, but it's also got a lot of expectations of strong rebound. The one thing Honeywell has too is a little bit of an oil optionality. So as the price of oil has gone up, a lot of Honeywell segments are tied to that. But again, Honeywell's been kind of the default go-to stock in this space, so the expectations are not low by any stretch. No, so it's not one I would be aggressively buying here. It's done well. It's a fine company. It's very well managed.
So what would you be buying?
Well, Parker Hannifin is up a lot. PH is the ticker, and you say, well, who's going to buy that? Look at how much it's gone up. This company has radically transformed itself, and like all these things, I just want to be clear. From here as a start point, don't expect these stocks to double. That just doesn't make sense. The market is efficient on a relative basis and is already discounting an expectation set of recovery. But Parker's really transformed itself from a machinery company into a premier multi-industry company. And today they're actually very focused on how they can simplify their design processes. It's an engineering company by design, and how they simplify that could create for several percentage point of profit margin uplift over the coming 2-3 years. No one else is doing anything like it. It is a bellwether of the space and a play on global economic recovery. And, it screens very, very well. The other one would be Emerson. Emerson, there's an optionality. There's a new CEO there, Dave Farr, who's been written up in business publications for a long time. I mean, he's out as CEO. He finally retired. The new CEO, there's an optionality of splitting Emerson into two businesses. It's basically its process business and its HVAC business. The two have nothing to do with each other. In the meantime, there's also a play on the optionality of oil and gas improving. Everyone's pretty down and out on oil and gas, but even if this market comes back even a little bit in North America, Emerson's going to print money. It's not a long-term bet, obviously, because the world's going green, but still everything reverts to a mean in the short run. And hydrocarbons are not going away. Certainly around the world, even if you exclude the United States, Middle East, China, other locales are still very reliant on hydrocarbons for future growth expectations and to fuel their growth. So Emerson also, to us, screens as kind of a winner on that basis. So, there's it's hard to get negative on this space right now just because industrial recovery is already underway on a pretty big basis, right? You can see all these different metrics. Just as I said earlier, the fly in the ointment is going to be rising raw material costs and then logistical squeezes that could, pressure your profitability in the short run as we roll into first quarter 2021 earnings season. But the market's really going to look through that. A lot of this stuff should be able to be smoothed over, and by the second half of the year, when the economy really gets kicking in. Right. I can't wait to go to a restaurant and a movie theater. This stuff looks like it's just really well positioned.
All right. Here's one more from our chat, and then we'll let you go. Do you have a favorite name as it relates specifically to Biden's infrastructure plan?
Yeah, that would be Eaton. Eaton, ETN is the ticker. It is a 30%. It has 30% market share. It's the largest low voltage electrical equipment supplier in Canada and the United States. It's a big global company. It would compete with Schneider in Europe, but it also has an electric vehicle business as well. And so if you think back to the Texas winter storms, it's pretty evident that a lot of the US electrical grid is very dilapidated. Eaton has a big footprint all over that. And so it's going to benefit from that. And the other thing is, of course, Biden's plan calls for raising corporate tax rates. Well, Eaton is an Irish incorporated company. And so it would pay higher taxes in the US, but it will not pay taxes as a foreign domiciled company based on the corporate rate rising to whatever level. It'll pay higher taxes in the US if that's required, but everyone else will pay, as American companies that compete overseas, higher taxes, but Eaton will not. So it kind of gets the double benefit of its favorable positioning based on its electrical businesses. And then as an Irish company, it just doesn't, it's not going to have to pay higher corporate taxes the way everybody else will have to.
Very nice. John Inch is a senior analyst for Multi-Industrials at Gordon-Haskett. John, we always appreciate your time. Thanks a lot.
Thanks, everyone. Take care. Have a great day.
All right. I mentioned the swag giveaway. We have reached the 500 like threshold, so let's do it. There is a link that I've added to the description of this video on YouTube. I'm also putting it into the chat right now. There are 4 ways to enter the swag giveaway contest. You can follow us on Twitter. You can share it with your friends. You can enter the secret code. What is the secret code? You're probably wondering. That's weird.
Yeah, I want to know what the secret code is.
That's weird. See, and this is the catch, because I'm only going to give the code away once. Well, I'll give it away every day, but once every day. The secret code is haircut. Why?
Because I need a haircut.
Don't ask me. I didn't make it. Yeah, that's why. That's why. Because Dennis needs a haircut. Okay.
It's bad, man. Look at it on the back here. It's crazy.
Let's see. Oh, wait. I thought Laura cut your hair for you.
Yeah. Well, she needs to do it again.
Jesus. All right. The link is in the chat. The link is in the description. Okay. Follow Benzinga. We'll enter you. Share the contest. That will enter you. And the secret code will also enter you. Again, the code is haircut. Like a thing that Dennis needs. That's the
there we go.
To win $75. Yes, haircut. Just like that.
You know what else I need? More tech stocks, man. The tech stocks are ripping. They're ripping this morning, and that's an obvious trade here too, because we're talking reopening and we're talking stay at home. We know tech has benefited tremendously in 2020 when we're in COVID. So anytime you get to reopening trade, it's going to be tech that starts to rally. Your Amazon, which we haven't even talked about this morning, is up 28 points here this morning. Microsoft, and full disclosure, I'm long all these stocks, up $1.50 this morning. Apple's actually started to go up here now. It's up, trading up 50 cents. So, if you want to go to the obvious stay-at-home ones, Netflix is getting a lift here now too. You're seeing a lot of tech stocks moving up here. Money is flying out of some of those reopening plays and into tech again.
What about Mr. Tesla here? Great day yesterday.
Yeah.
Maybe moving a little bit with crypto, because crypto is just going to the moon right now. But Tesla was...
It's a tech trade. People got it right there in the tech trade too. So, Tesla's benefiting from this headline as well. The chart on Tesla is starting to break trend to the upside here too. So it's starting to look better here. Yeah, we wanted it. Joel and I both said it needs to get above that 720. You're not quite there yet, but you're getting there. We're now taking out the high from 4 or 5 days ago. So that's good news for the Tesla bulls. I've been on the Tesla bear train for a while here. Gets above 720, maybe there's a tradable. There is some tradable opportunities here. It's looking a lot healthier than it did a week ago.
Yeah, as you said, it's breaking trend to the upside. So looking good there. This is going to be one of the many, many trades tomorrow off of the Coinbase IPO, right? Someone in chat just mentioned PayPal. That'll move with it.
Right.
Square will move with it. All the Bitcoin stocks will move with it. Voyager will move with it. There's going to be like at least a dozen stocks moving in tandem with Coinbase tomorrow. It wouldn't shock me if Coinbase immediately just becomes the bellwether, the leader of the Bitcoin stock pack, so to speak, right? Or the indicator, right? Aside from Bitcoin itself, right? I'm talking about just stocks. But it wouldn't shock me. It's going to be a massive, massive direct listing tomorrow.
Do we have a projected market cap for Coinbase?
I'll tell you, it'll be in the premium.
Oh yeah, it'll be in the premium. Right.
We have a projected price. It's going to be somewhere around $400, I think.
Wow. Yeah, let's see if it changes like the Airbnb IPO. Remember, the Airbnb IPO was supposed to open up near, I think, like 40s, and then it went up to like 150. 70s was the original price. The 70s was the original price.
I want to say Zippy, it's going to be a $100 billion company when it IPOs. That's what I think. What their own valuation was. We'll see what happens tomorrow. But again, it's always changing with Bitcoin. Bitcoin itself it broke through 64,000 this morning.
Well, what happens when they approve the ETF too? This is why I'm still long Bitcoin. 2 different funds now. I still want to be long Ethereum. I mean, I know it's nothingness, and I get the whole argument about it, but the story. I said the reason I bought it back in November of 2020. I said I think crypto is going to be one of the main stories in 2021, and that's absolutely turned out to be true. I don't see the story cooling off. I don't see why it has to cool off. I mean, the Coinbase is, like you said yesterday, is going to be a big day for crypto. Yep. Is this the peak of it all? I don't know that, but there's so many now with NFTs and stuff. It's just not going away.
Yeah,
crypto's just not going away.
So you asked what happens when they approve an ETF. I mean, how is that anything but bullish for Bitcoin and crypto?
Exactly. So I just got to think like this. And once you have an ETF approved, which is going to happen, and we haven't, it's going to happen eventually. Then you're like, okay, well, now you have a whole nother, group of investors that are going to be coming in through ETFs. Institutional investors will be coming and buying it too. I don't see any reason why Bitcoin isn't eventually $100,000. So I'm still long. I reallocated, and I actually moved some of my that was in the closed-end fund into the ETF because the ETF will always track better. But for the most part, I still got all my Bitcoin. I wish I had more. I wish I had Ethereum too.
So they're asking what the IPO price is. There is no IPO price of Coinbase. There's going to be a reference price. This is a direct listing. So they're not issuing new shares. They're not raising any money. They're not going to underwriters and pricing it out. That's not what a direct listing is, just a little bit different. They're just basically just allowing insiders to sell directly without raising any money or issuing new shares. So there's going to be a reference price that should act as like a guide.
Do we know that reference price yet?
No. Like I said, I think it's somewhere around 400. But
they're going to be that high with the reference price.
Yeah. But again, I don't know exactly. I recommend for anyone who missed it, watch our segment on yesterday's show at 9 with Matt Hammond. He walked through how he's going to trade the Coinbase IPO tomorrow. And it's going to be the biggest IPO of the year, just in terms of, if not valuation, just interest, human interest. This is going to be the most retail-driven IPO that I can remember in quite some time. So very excited for that. We didn't even mention NVIDIA. I mean, Dennis just mentioned tech, and NVIDIA's with tech, but they had their keynote presentation yesterday. They gave good guidance. They're getting into server CPUs, and just blasted off at the expense of every other semi, at the expense of AMD and Qualcomm and Texas Instruments and Intel and all of that. NVIDIA just single-handedly knocked them all down a peg yesterday.
I mean, this is just your classic. You buy good companies on dips. And, valuation has always been high, but this is still your chip play. Great company.
Look at that level. Look at where it's at. Look at that double top. Huh.
You're hammering it though, like you're going into it hard.
Yeah.
So could it just blow through with that kind of momentum? It could just blow through it. But yeah, you're right up at the all-time highs. It's unbelievable that a month ago we were talking about NVIDIA being down 25% from its all-time high. In 1 month, it gets it all back. So March, if you go back, obviously March 8th, $462. It's a stock that I had in my long-term portfolio for a long time. I got spooked out during the COVID crisis. Obviously a major mistake. And I never got it back. Wish I had it. NVIDIA pullback still to be bought.
Yeah, this is also a crypto play. So, geez, I mean, how do I not buy these stocks when they're down?
What about AMD?
Silliness.
What about AMD? Because it gets hit yesterday on the NVIDIA news. It's been in the doldrums here for a while, but it's still holding on. I'd say as long as it's above 73, you're still holding the major support level. It's an ugly head and shoulders when you back out the chart on AMD. But at the same time, it was talked about as a major crypto player as well. So does AMD eventually start? Is this a dip you want to buy in AMD? I'm asking you. I kind of want to, but
I just spent a minute looking at the NVIDIA chart saying, why didn't I buy that dip? So sure. I mean,
you're almost 20% from the highs on AMD. I mean, we almost got to $100. We didn't quite get there. And now, $79. Is this Lisa Su turnaround play, obviously, or is Intel, is it all about value now? And Intel's still going to eat their lunch and Intel's coming back? Is NVIDIA eating their lunch? Or is AMD, is there still room? Is there enough pie or enough cake here for AMD to eat as well? I kind of like AMD down here.
Maybe. And I just
a catch-up trade.
I just saw someone in chat mention NVIDIA plus ARM. I did read there's a column that I read from in the Wall Street Journal, Heard on the Street, and the columnist speculated that yesterday's announcements could make it harder for the NVIDIA ARM merger to go through. That hasn't actually been approved yet by regulators, so we're still sort of waiting on that. But assuming it does, yeah, NVIDIA is in pole position. They're in great shape. But on the AMD front, every dip has been a dip to be bought, right? So I mean, why not keep that trend going? Dennis, any final thoughts from you before we let you go today?
Just watch at 9:30 that we don't get a reversal. Just because we know clearly can see what we were talking about as a 5% trade is actually growing here, because you're not seeing a rally in the cruise lines, you're not seeing a rally in the airlines, but you are seeing a substantial rally into the tech trade, which is the classic 2020 trade happening here. Rally from, Peloton has continued to rally here this morning. Zoom is up more as well. We're up another $2 in Zoom. Amazon is getting a lift. You had a crazy price target from Piper, I believe, come out over, which we didn't even get to. Obviously, that would have got some headlines, but JNJ is getting them all. But I think Piper, I'm long Amazon, full disclosure. I've been long it forever. I'm actually long in the trading account as well. It's Piper, I think, came out with a $5,700 bull case, if I read that right.
Oh, so like next month. Sweet.
I think it was Piper.
Okay, cool.
Was it Piper?
I don't. Here, let's check. I don't even know. Let me go to the
I'm
news.
going for my memory here.
Go to the news feed.
This was last night. This was a big thing coming out after the bell, and now J&J is stolen all the headlines, so we're not seeing there. But
you might think I'm crazy, Dennis, but I think we're due for a melt up. We're gonna rip. I have this feeling
on Amazon.
Well, it's just tech is back. You're starting to see some of the tech come back, some of the bigger tech players. And I think that's was the rotation that happened that most of us probably just didn't pay attention too much. There was like kind of a sell into the profits, and then they rebought it back up. And to me, I'm still watching this trend channel. If we can break out, really get above to, let's say, 420s on the SPY, we'll be out of this trend channel and into a new trend. And I think that's going to happen.
Yeah, I was going to say it was Jeffries.
It's Jeffries. Sorry, it was Jeffries.
That's all right.
You know what, Mitch? I'm on board with you. Obviously, Amazon's one of the biggest holdings in my long-term portfolio. It's in all of my ETFs. I have so much exposure to Amazon all over the place. I just don't think Amazon has been on a hell of a run here. I would love a dip to, if I wasn't in it already, I would probably want a dip to buy more. But I mean, this has been consolidation station here for Amazon for about a year almost now. We had the initial pop up to the summer, so July. So we're talking like 9-10 months of consolidation between 3,000 and 3,500. Every time Amazon has done this in the past, it has been consolidation to go higher. So is the Amazon story over? I mean, we did the same thing in 2018 and 2020. We meandered between 1,500 and 2,000. And everybody's like, okay, well, Amazon's pause, is it over? And then obviously COVID happened and the stock went up 70% in 3 months.
Yep.
So, I mean, this is digesting the big gain that we had from early in 2020. But I think it's a digestion period. And I think eventually, I don't know if 5,700 is coming, but I've said on this show, I've thought the stock's going to 5,000 for a long time. I still think it is. I'm not chasing it. I'm obviously been long it, but you get pullbacks. I think pullbacks in Amazon are to be.
I just want to know we didn't go back for nothing. It was out at like 4 o'clock yesterday, so we had the rating. It was all the way down at like 4 p.m.
There you go. Watch Amazon. Jeffries.
$5,700. I wouldn't battle against Amazon. One of the things is they also reinvested in their company, right? And so I think this is the company that always gets their earnings. I mean, look at the earnings. Look how many times they beat. I mean, that tells you enough. Yeah, I listened to what Joel has told me before. If you see a company continuously beat on their earnings, that might be one to keep on your radar and keep in your portfolio.
All right, Dennis, check out the dating apps, Match and Bumble. Facebook is apparently testing a new video speed dating app, according to The Verge. This is breaking. MTCH
getting hit on this.
BMBL. Get in there, man.
Hey, Spencer, before we get out of here today, definitely let's pull up the giveaway link and actually show them how they can enter it and clicks.
And maybe let's do that right now with Neal. So, Dennis, go hit the bid on Bumble or whatever it is you do at 9:05 and
swipe up.
Dennis, just swipe up, all right? We'll talk later. All right. Here, you know what? let's bring on Neal here. Neal,
Yep.
what's up,
Hey
man?
guys,
How we doing?
not too much. I am excited about this giveaway. So we are doing a special giveaway for the pre-market prep viewers. And it's just perfect that we're doing this when the guys are gone and it's just us three buffoons here doing this. But hey guys, here's how it works. Click the link that Spencer is graciously about to drop into chat. Sure. And you can win up to $75 in swag, whatever the heck you want, from the Benzinga swag store. Highly recommend, if you're a PMP fan, we got plenty of PMP stuff in there. Go in there and get it.
There is a PMP section. Don't tell Joel. But...
Yeah, okay. Maybe a good thing that the guys aren't here. But
if you want to be a winner.
How do we have 287 or 687 entries already? Ooh. Holy guacamole. All right. So guys, click that link, go there. It's very self-explanatory. There are going to be 4 winners. First prize $75, and then the 3 following prizes, second, third, fourth place, $25 in swag. So if you need a new hat, we even got underwear. If you need a fresh pair, you can use this to get that from the Benzinga store. And what I will say about the underwear in the store is that it has a hidden message. The underwear does, in fact, I'm not kidding, I'm always honest, the underwear has a hidden message that you cannot see on the store. So there's an element of mystery there and surprise. What's
Neal, did you hear the drama about the briefs yesterday?
About the boxer briefs?
Yeah, we changed our briefs.
No, we're making a new YouTube channel, right? Just for our short clips, not for the.
Okay, and nice segue, Spencer.
Luke Jacoby decided we should call it Benzinga Briefs.
I mean, let chat decide on that one.
We already did. No, we're not going to do this again. It's Benzinga clips. It's done.
Okay.
The only thing that we forgot to add here, Neal, that we got to add is where's the subscribe.
So here, guys. I put the link to edit the contest. This is late night Neal.
No, he did. He did. He's right.
Yeah. So this is late night Neal throwing this thing together. But you've got the basics here. The number one thing here that's going to get you is look at the bottom where we've got the yellow smiley face. If you complete every action, if you do this now before Spencer and Mitch get hard on you and tell you got to subscribe to the YouTube channel, which they're going to add today, if you get in now, you'll get 10 bonus points. So each one of these are like an entry into the contest. They're going to increase your odds of basically getting free underwear. But the secret code.
Oh, I already gave it away. Don't give it away. I already gave it away.
Okay.
Okay.
Did you do it in the chat?
Boom.
No, I gave it away like 20 minutes ago.
Yeah, we
you're on top
talked a little bit.
Yeah,
we talked a little bit about this.
We already gave it away. Don't give it away.
All right.
They already got it. That's it. I'll give it away. I'll give it away once per show. If you missed it, tough.
Yeah. And yes, is this a way to get you guys to engage with our content? Yes. But is it going to get you free stuff? Come on. Yeah. So definitely participate. I think we might keep doing this for each of our shows. So definitely tune in every day so you can get the secret code, complete everything, and get that sweet, sweet swag.
Yeah.
If you want to be a winner.
Exactly. That's nice. I like that.
All right. So I'll do this every day for the rest of the week. So if you miss it today, don't worry. It's a week-long contest. So
ends Friday after the close is when we pick our winners.
Yep. So I have a few other just housekeeping items, but I want to open the floor to Neal. Tease your show if you want. What's up next on Get Technical today?
Up next on Get Technical, we are going to answer the burning question that gets shouted at me constantly, is should I buy Palantir?
Every day with the stock, I swear.
PLTR. We are going to answer that question today. Of course, I'm going to tell you what I would do. The rest is up to you. And then after that, we have tickers from Twitter. So I put a post up on Twitter. If you guys don't know, at Neal's tweets every morning from now on, I'm going to start asking you what tickers you want to look at. Let me know what time frame you want to look at them on. And then that's going to be the beginning of the show. Maybe we create a watch list, 1 or 2 good ones. But Chad is smart, man. Like I don't need a screener anymore. because of the tickers that these guys come up with, these guys and gals.
Really?
Yeah, it's pretty incredible. There are a couple in there that are just very, very solid. So we're going to go through those. I will say first up is going to be steel, hit some shipping, consumer staples, some microchips, and then and then it looks like we got some Twitter stocks. We got SOS in there as well. So, yeah, that's the show. It's going to be fun, silly goose times. I'll try to get through as many of those tickers as possible. And we're going to look at NVIDIA, and I'll just tell you right now, NVIDIA, I think is within a buying range. You're obviously going to want to see a breakout above that all-time high. But the move above the ascending triangle pattern that we have here is not 5% yet. And I typically say I use the William J. O'Neill kind of rule. Don't chase something that has gone up, broken out already 500% or more. It's like 4.5%, something like that. So it's within range, and plus it's freaking NVIDIA. And I agree with Mitch. Melt up is upon us. It is time for tech once again. So
a William O'Neill reference on this show. He doesn't get name dropped very often. Wow, Neal. I mean,
get his middle initial right. I'm gonna feel every time I say the man's name, I add a J.
Why?
I don't know. I don't know, because to me, he's on like the Mount Rushmore of technical analysts, technicians, chartists, whatever.
Yeah,
and they all have middle initials.
All right.
If you're in the 50s, you had a middle initial because everyone had the same name.
It's true. It's true. Bob, William. It's true. Okay. Yeah. All right, Neal, I'll let you hop, start your stream up, and I'll segue to you.
All right. Thanks.
All right. Couple of housekeeping items. I mentioned the swag giveaway. If you missed the Benzinga Bootcamp this past Saturday, that does not mean you missed it forever. You can get the recording. The link is in chat right now. events.benzinga.com/video recordings. Posted the link in there. You can view the replay of the bootcamp that happened on Saturday. Also, upcoming, our next event is the Clean Tech Small Cap Conference. It is not this week. It is next week. It is the 22nd. It is Thursday. I'm putting that link also in the chat. And while I'm at it, I'm going to play a short trailer. That'll be next Thursday. Again, check out the link on the link from the video or the link in chat right there. What's coming up today, you asked? I'm glad you asked. Great question, everyone. Here is the schedule for today. We've got Get Technical up next, Benzinga Pro at 10:30, SPACs Attack at 11, the Power Hour at noon, BZ Crypto Show at 2, Biotech Buzz, followed by the ETF Show, the At the Close Show, Cannabis Insider, a new show that we're doing with TrendSpider. If you like Jake Wojcicki on our show, he's got his own show today. It'll be at 5 o'clock Eastern. TrendSpider Charts, and then Trading Nomadic at 6 p.m. That is the breakdown for today, everyone. If you haven't already, smash that like button. Leave us a comment on YouTube. Hit subscribe if you'd like. Hit share. Engage with us. Send us an email if you want. PreMarket@benzinga.com. That goes to myself, Joel, and Dennis. And Joel and Dennis don't even look at it, so really it's just me, if I'm being honest. PreMarket@benzinga.com. The show is always available as a podcast. We're on every major podcast platform, or just rewatch the show on YouTube. Thanks to our guest today, John Inch. Please remember, as always, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Please do your own DD as always. All right. I'm checking to see if the Get Technical guys are on, if Neal and producer AB are good. And as soon as I get the okay, I'm going to hop and I'll see y'all at 10:30 or 10:45 for my news desk update with Brent Slava, the head of the Benzinga Pro News Desk and the Benzinga resident in-house DJ. If you have not seen Brent DJ, we do occasionally do some streams with Brent. We talk stocks. We talk music. We'll make it more of a regular thing. I promise. But thank you very much for Mitch. YouTube 20. I almost forgot that. YouTube 20. We get you 20% off any Benzinga Pro sub. Check it out. YouTube 20. You want to become an affiliate? Benzinga.partnerstack.com. You can participate in a revenue share program with Benzinga for sending us new subs. Get 30% of any new sub you send to Benzinga Pro. All right, that's going to be a wrap. This video should redirect to Get Technical. If it doesn't, I'm going to be so mad at producer AB if it does not redirect. I'm going to be furious. Let's see if before I end. Okay, he set it up. Okay. He's not fired yet. All right. That's a wrap. I'm going to hop. I'll see you all later. Everyone have a good open. Good luck. And we'll talk to you later on in the day.